Okay, so we're diving deep into Tony Robbins' Money, Master the Game. It's a pretty hefty book, but it's basically a roadmap to not just financial freedom, but like financial mastery.
Yeah, it's ambitious, but Robbins really breaks things down in a way that's easy to understand and act on. He even starts with the simple stuff, like just opening a retirement or savings account.
Right, like the first step is just getting started, right? But then he goes into how that simple step can lead to big things with the whole idea of compound interest. That stuff's almost magical.
Absolutely, he emphasizes how consistent contributions, even if they're small, can grow exponentially over time. It's that snowball effect.
Like plant a tiny seed and boom, you've got a giant money tree. But here's where things get really interesting, right? Tony goes beyond just the numbers and digs into the psychology behind money.
Yeah, that's a crucial part. He explores the 6 human needs that money often tries to fulfill. It's about understanding what you're really seeking through money.
So it's not just about getting rich, it's about figuring out what you want your money to do for you. Like, is it security, significance, contribution?
Exactly. Understanding your why can be a total game changer.
So after laying that foundation, Tony takes us on a myth-busting journey in Chapter 2. I have to admit, I was pretty surprised to learn that actively managed mutual funds often don't beat the market.
Yeah, that's a common misconception. He reveals how these funds often underperform simpler, low-cost index funds, despite all the promises. And then there are these hidden fees, like cash drag, that can really eat into your returns.
Wait, so even the cash in a fund can work against you?
It can, and Robbins makes sure you understand the difference between the advertised average returns and your actual return, the money you actually get to keep.
Okay, so it's like he's giving us X-ray vision to see through all the financial jargon.
Exactly. And to navigate this complex world, he really advocates for finding a fiduciary, an advisor who's legally obligated to act in your best interest.
Like having a financial guardian angel.
Exactly. Now, in Chapter 3, Robbins guides us through defining our financial dreams and turning them into concrete goals. He introduces this concept of 5 levels of financial freedom.
It's not about finding some magic number, but about figuring out what your dreams actually cost and the lifestyle you want.
Right, it's about taking control of your future, and he doesn't just leave you hanging with a wish list. Robbins shares his own 3-step formula for achieving big goals, the same one he's used himself.
I love that he practices what he preaches. So for those of us who are, a little impatient to reach financial freedom, he outlines 5 strategies to supercharge your savings. Things like cutting expenses, boosting your income.
It's about being proactive, but he also makes it clear that it's not about deprivation. He actually encourages setting up a dream bucket where you allocate funds for things that enrich your life now.
That makes sense. You don't have to put your life on hold while building wealth. So when it comes to investing, I always feel overwhelmed by all the options. Where do you even begin?
Well, in Chapter 4, Robbins tackles that head-on. He dives into asset allocation, calling it the most important investment decision you'll ever make.
No pressure then.
Right. He emphasizes the importance of diversification across different asset classes, like stocks, bonds, and real estate.
So instead of trying to time the market, which always felt like a gamble to me, it's about spreading your investments.
Exactly. He even shares insights from David Swinson, a legendary investor whose portfolio consistently beat the market. And he explains this concept of dollar-cost averaging, which takes the emotion out of investing.
Sounds less stressful. But what about when the market takes a nosedive? That's when I start to panic.
Well, in Chapter 5, Robbins delves into strategies for achieving upside without the downside. He introduces this idea of the all-weather portfolio developed by Ray Dalio.
That sounds intense.
It's actually about balance. It's designed to perform well in any economic environment, whether it's inflation, recession, you name it.
So it's like having a financial umbrella for any kind of storm.
Exactly. And remember those annuities we talked about. Robbins sheds light on how fixed indexed annuities can offer a guaranteed income stream during retirement without risking your principal.
Like having a personal pension. That sounds reassuring, but honestly, sometimes I feel like I need an entire team of financial advisors to make sense of all this.
Well, in a way, Robbins gives you that in Chapter 6. He shares wisdom from interviews with 12 investing legends.
Wow, 12.
Yeah, he distills their insights down to 4 key obsessions they all share. It's like getting a masterclass in the mindset and habits of the world's most successful investors.
So he gives you access to the financial gurus, essentially.
Right. But Money Master the Game isn't just about building wealth, it's about creating a meaningful life, too.
I was going to say, it feels like there's a deeper message here, beyond just the money.
Definitely. In Chapter 7, Tony takes us beyond traditional finance, exploring his insights on happiness, fulfillment, and living a life of impact.
So it's not just about getting rich, it's about living a rich life.
Exactly. He challenges us to think about the 3 key decisions that can radically improve our lives, what we focus on, what things mean to us, and the actions we take. It's about taking ownership.
And I love how he emphasizes the science-backed secret to happiness giving.
Absolutely. He explains how investing in others, whether through acts of kindness or charitable giving, can be the most rewarding investment of all.
It's like that saying, the more you give, the more you get.
Exactly. And to help you put all of this knowledge into action, Robbins provides a really helpful checklist for success at the end of the book.
Like a roadmap to actually implement all these ideas.
Exactly. It summarizes the key steps and strategies outlined throughout the book, guiding you towards financial mastery.
So it's like having Tony Robbins as your personal financial coach.
That's a great way to put it. He emphasizes the importance of taking action and not just passively absorbing the information.
It's about turning knowledge into results.
Exactly. It's about creating a life of abundance and fulfillment.
Well said.
Now, let's dive a little deeper into those 7 steps in Robbins' checklist. Each step corresponds to a chapter in the book and offers practical steps towards financial mastery.
Okay, let's break it down. Step 1 from Chapter 1 is all about making a crucial decision, becoming an investor, not just a consumer.
He wants you to actively commit a portion of your income to building long-term wealth, what he calls your freedom fund.
And he's big on automating your savings, right?
Yes, set up those automatic transfers to your freedom fund and make it a habit.
No more excuses. Okay, Step 2, based on Chapter 2, is becoming an insider in the world of finance.
Exactly. It's about being aware of the common myths and misconceptions that can trip you up, like how mutual funds often underperform and have those hidden fees.
And finding a trustworthy fiduciary, right? Someone who's actually on your side.
Absolutely. And understanding the difference between those advertised average returns and your actual returns after all the fees.
That's a good point. It's easy to be misled by those big numbers.
Right. Step 3 from Chapter 3 focuses on making the game winnable. This is where you get specific about your financial dreams.
So figure out what those dreams actually cost and set deadlines.
Exactly. And find those small, consistent ways to save money. Every little bit counts.
It's about finding creative ways to make it work. Robbins even suggests exploring ways to reduce your tax burden.
Right. He wants you to keep as much of your hard-earned money as possible.
Okay, Step 4, building in Chapter 4 is all about asset allocation. Diversification is key, right?
Exactly. Remember those 2 buckets? The security bucket for stable investments and the risk growth bucket for higher potential returns.
It's about finding that balance that's right for you.
And don't forget about the dream bucket. Allocate some funds for things you enjoy now.
Okay, Step 5 from Chapter 5 focuses on creating a lifetime income plan. Robbins talks about building an all-weather portfolio.
Right, a portfolio designed to withstand different economic conditions and deliver consistent returns over time.
And using annuities, particularly fixed-indexed annuities, to potentially secure a guaranteed income stream in retirement.
Exactly, and setting up a living trust to protect your assets and ensure a smooth transition for your loved ones.
So Step 6 from Chapter 6 invites you to invest like the top 0.001%. That sounds intimidating.
It's actually about learning from the best. Remember those 12 investing legends he interviewed? He encourages you to revisit their wisdom and apply their principles to your own journey.
Learn from the masters, right? Okay, and finally, Step 7, based on Chapter 7, is all about taking action, enjoying the process, and sharing your abundance.
Robbins reminds you that true wealth goes beyond financial gain. It encompasses living a meaningful life and making a difference.
He talks about the power of gratitude, focusing on what you can control and making choices that align with your values.
And he encourages you to find joy in the journey and share your success with others. By embracing generosity and making a positive impact on the world, you unlock a deeper level of wealth and fulfillment.
It's about creating a ripple effect of abundance.
Exactly. So that's Robbins' checklist in a nutshell. It's a powerful tool for turning knowledge into action and creating a life that's both financially abundant and personally fulfilling.
It's about taking control of your financial destiny and building a legacy that goes beyond yourself. Okay, so we've laid out the 7 steps, but now let's take a closer look at some of the specific financial instruments and strategies that Robbins recommends.
Sounds good. Let's start with the foundation. In Chapter 1, Robbins emphasizes the importance of starting with a simple retirement or savings account.
Back to basics.
Right. He stresses the power of consistent contributions and the magic of compound interest.
It's amazing how quickly those small contributions can grow over time.
It really is. To illustrate the concept, imagine you invest just $1,000 today at an annual interest rate of 7%. After 1 year, you'll have earned $70 in interest, bringing your total to $1,070.
Not bad for a year's work.
And here's where the magic kicks in. In the second year, you'll earn interest not only on your initial investment, but also on the interest you've already accumulated.
Oh, I see. So you're earning interest on $1,070 now.
Exactly. And that's how compound interest works its magic. As you continue to invest consistently, the power of compounding really takes off, leading to significant wealth accumulation over time.
It's like a snowball rolling downhill, getting bigger and bigger.
That's a great analogy. Robbins emphasizes that even small, regular contributions can make a huge difference in the long run. It's about developing a habit of saving and investing consistently, regardless of market ups and downs.
It's about playing the long game.
Exactly. And to make it even easier, he encourages you to automate your savings. Set up automatic transfers from your checking account to your retirement or savings account. That way, you're consistently contributing without even thinking about it.
Out of sight, out of mind. So we've covered compound interest, but what about managing risk?
That's a great question. Robbins emphasizes that understanding and managing risk is crucial when it comes to investing. He's clear that risk is a natural part of the game, but it can be minimized through smart decisions and diversification.
So it's not about avoiding risk altogether, it's about managing it effectively.
Exactly. He encourages you to figure out your own risk tolerance, considering factors like your age, your financial goals, and how long you plan to invest.
So younger investors with more time on their side can typically handle more risk than those nearing retirement.
Exactly. And speaking of getting help, Robbins also stresses the importance of seeking professional guidance when it comes to investing.
Especially if you're new to the game.
Right. He recommends working with a fiduciary, a financial advisor who is legally bound to act in your best interest.
Someone you can trust to guide you in the right direction.
Exactly. A fiduciary can help you develop a personalized financial plan, choose appropriate investments, and keep an eye on your portfolio, ensuring your investments stay aligned with your goals and your risk tolerance.
It's like having a financial expert in your corner.
That's a great way to put it.
Okay, so we've talked about compound interest, managing risk, and getting professional advice. Now let's circle back to the psychology of money. Robbins emphasizes the importance of understanding not just your financial goals, but also the deeper why behind them.
Right. He encourages you to explore the 6 human needs that money often tries to fulfill.
It's about figuring out what you're really seeking through money, right?
Exactly. It's about identifying the needs that drive your financial desires so you can make more conscious and fulfilling choices about how you manage your money.
It makes sense. If you understand what you're really after, you can make decisions that bring you greater satisfaction.
Exactly. Robbins points out that money can be used to satisfy needs for certainty and security, variety and uncertainty, significance and recognition, love and connection, growth and development, and contribution and making a difference.
Wow, that covers a lot of ground.
It does, and he explains how recognizing which needs are most important to you can help you align your financial goals and spending habits in a way that brings more meaning to your life.
So, for example, if you value security and certainty, you might prioritize building a strong emergency fund and investing in low-risk assets.
Exactly. And if you crave variety and uncertainty, you might set aside some money for travel, hobbies, or experiences that bring excitement.
It's about finding the right balance for your unique personality and needs.
Exactly. And if significance and recognition are important to you, you might focus on building a successful career, investing in your personal growth, or contributing to causes that you believe in.
And for those who prioritize love and connection, investing in relationships and creating a nurturing environment might be top of mind.
Right. And if you crave growth and development, you might prioritize education, travel, personal growth programs, or experiences that push you to expand your horizons.
And for those who value making a difference, giving to charity or supporting causes that align with their values might be a priority.
Exactly. The key is to align your financial goals and spending habits with the things that are truly important to you.
It's about making sure your money serves your values and helps you create a life that's aligned with your deepest aspirations.
Precisely.
Okay, so now that we have a better understanding of the psychology behind money, let's dive into the world of investing and explore some of the common myths and misconceptions that Robbins tackles in Chapter 2.
Sounds good. These are important because understanding these pitfalls can help you make better decisions and avoid mistakes that can derail your financial progress.
Let's start with one that surprised me. Robbins debunks the myth that actively managed mutual funds consistently beat the market.
Right. He cites studies showing that, in reality, the vast majority of actively managed funds actually underperform their benchmark indices in the long run.
So all that fancy stock picking doesn't necessarily translate to better returns.
Exactly. And a big reason for this is the high fees and expenses associated with active management. Those fees can really eat away at your returns over time.
So simpler might actually be better.
Often it is. Robbins encourages investors to consider low-cost index funds as a viable alternative. Index funds are designed to track a specific market index, like the S&P 500, and aim to replicate its performance.
So they're not trying to beat the market, they're just trying to match it.
Exactly. And because they don't involve all that active stock picking, index funds tend to have much lower fees and expenses that can lead to higher returns over time.
Makes sense. It's like the tortoise and the hare. Slow and steady wins the race.
Exactly. Another thing Robbins exposes is the sneaky world of hidden fees that can plague investors. They often lurk beneath the surface of seemingly straightforward investment products.
It's like those hidden charges on your phone bill.
Right, he talks about fees like expense ratios, transaction costs, and soft dollar costs, explaining how these charges can significantly reduce your overall returns.
So even if an investment looks good on paper, those fees can really eat into your profits.
Absolutely. Robbins really stresses the importance of understanding those fees and factoring them into your investment decisions.
Okay, so we need to watch out for hidden fees. What else should we be aware of?
Robbins cautions against relying solely on those advertised average returns. They can be very misleading. He emphasizes the importance of understanding dollar-weighted returns.
Okay, I'm not sure I follow.
Dollar-weighted returns take into account both the timing and the amount of your investments. They give you a much more accurate picture of your actual returns, as opposed to just looking at average performance.
So dollar-weighted returns are personalized to my specific investment activity.
Exactly. And they give you a much clearer picture of how your money is actually performing.
Okay, that makes sense. So we've got to be wary of misleading average returns. What else?
Robbins also debunks the myth that all financial advisors are created equal. He's a big advocate for working with a fiduciary.
Someone who's legally obligated to act in your best interest?
Right, as opposed to a broker who might be more focused on selling you products that generate commissions for them.
It's all about finding someone who's truly on your side and has your best interests at heart.
Exactly. Robbins even provides a checklist of criteria to help you identify a trustworthy fiduciary.
So you can find a financial advisor who's really going to help you achieve your goals.
Precisely. These myth-busting insights from Chapter 2 are all about empowering you to navigate the financial world with confidence and avoid those common traps that can derail your progress.
Knowledge is power, right?
Absolutely. By understanding these pitfalls, you can protect your hard-earned money and make smarter investment choices.
So we're equipped to make informed decisions and set ourselves up for long-term success.
That's the goal.
Okay, so we've tackled the myths. Now let's move on to Chapter 3, where Robbins empowers you to take control of your financial future by defining your dreams and turning them into actionable goals.
He provides a roadmap to identify what truly matters to you and create a plan to make those dreams a reality.
Sounds inspiring. He even introduces this concept of the 5 levels of financial freedom.
Yeah, it's a really interesting framework. He breaks down financial freedom into 5 distinct stages. Each stage represents a different level of independence and abundance.
Okay, let's hear it. What are these 5 levels?
The first level is financial security. It's about having enough income to cover your basic living expenses without having to work.
So it's about having that safety net.
Exactly. The second level is financial vitality. It's about having enough income to cover your basic needs and enjoy some discretionary spending on things that bring you joy and enhance your life.
So it's not just about survival, it's about actually enjoying life.
Exactly. The third level is financial independence. This is about having enough passive income from investments and other sources to cover all of your living expenses.
So you have the freedom to choose whether or not to work.
Exactly. The fourth level is financial freedom. This involves having enough wealth to live comfortably, pursue your passions, and make a difference in the world without financial constraints.
So you have the resources to really live your dreams.
Exactly. And the fifth and final level is absolute financial freedom. This is about having enough wealth to fulfill any dream or desire, regardless of cost. It gives you ultimate freedom and flexibility to live life on your own terms.
Wow, that's the ultimate goal. So Robbins encourages us to figure out which of these levels resonates most with us and then set our financial goals accordingly.
Right. He provides some practical exercises and strategies to help you calculate the cost of your dreams and create a plan to achieve them.
It's about turning those dreams into concrete goals. And to make sure you stay on track, he stresses the importance of setting deadlines for each goal.
Yes, deadlines create that sense of urgency and accountability.
And to help you tackle those big goals, he introduces a powerful 3-step formula drawn from his own experiences and from interviewing countless successful people.
It's a formula for achieving what might seem impossible.
Okay, I'm intrigued. What are those 3 steps?
The first step is unleashing your hunger and desire.
So it's about getting really clear on what you want and why you want it.
Exactly. You need to cultivate that burning desire to achieve your goal that will fuel your motivation and keep you going when things get tough.
Makes sense. What's the second step?
The second step is taking massive and effective action. It's about identifying the specific steps you need to take to reach your goal and then taking those steps with consistent, unwavering commitment.
It's about walking the walk, not just talking the talk.
Precisely. And the third step is embracing grace.
Grace. How does that fit into achieving goals?
It's about recognizing that sometimes things happen that are outside your control, things that might help or hinder your progress.
So it's about being flexible and adapting to the unexpected.
Exactly. It's about trusting that the universe will support you if you stay true to your path, even when things don't go exactly according to plan.
It's about having faith in the process.
Exactly.
Okay, so we've got our goals, we've got our three-step formula. Now, how do we speed things up? How do we supercharge our savings to reach financial freedom faster?
Robbins offers 5 powerful strategies to accelerate your progress.
Lay them on me.
The first strategy is save more and invest the difference. It's about finding ways to reduce your expenses, no matter how small, and then investing the money you save.
So every dollar you don't spend is a dollar you can invest.
Exactly. Whether you're cutting back on discretionary spending, negotiating better rates on your bills, or finding creative ways to save on everyday purchases, every bit counts.
It's about being mindful of your spending habits.
Right. The second strategy is earn more and invest the difference.
So it's not just about cutting back, it's about bringing in more money.
Exactly. This might involve getting a raise or promotion at your current job, starting a side hustle, or developing new skills that can increase your earning potential.
It's about being proactive and exploring different income streams.
Right. The third strategy is reduce fees and taxes and invest the difference.
So it's about keeping more of your hard-earned money.
Exactly. This might involve choosing low-cost investment options, exploring tax-advantaged retirement accounts, or working with a financial advisor who can help you optimize your tax strategy.
So it's about being smart with your money and minimizing the amount you lose to fees and taxes.
Exactly. The fourth strategy is get better returns and speed your way to victory.
So it's about making sure your investments are working hard for you.
Right. This might involve investing in growth stocks, real estate, or other asset classes that have the potential for higher returns.
So you're willing to take on a bit more risk in exchange for the possibility of bigger rewards.
Exactly. But remember, it's important to manage that risk effectively.
Right. Diversification is key. Okay, and the fifth and final strategy.
The fifth strategy is change your life and lifestyle for the better.
Okay, this one sounds intriguing.
It's about considering whether there are any significant changes you could make to your lifestyle or location to reduce your expenses, increase your income, or even take advantage of more favorable tax environments.
So it might involve some big life decisions.
It could. It might mean downsizing your home, moving to a lower cost of living area, or even relocating to a country with more favorable tax policies.
It's about thinking outside the box and exploring different options.
Exactly. And while these might seem like drastic measures, sometimes they can be the key to unlocking greater financial freedom and creating a life that's more aligned with your values and aspirations.
It's about taking control of your destiny and making bold choices to create the life you truly want.
Exactly. Robbins emphasizes that achieving financial freedom often requires a combination of mindset shifts, disciplined actions, and strategic decision-making.
It's not just about the numbers, it's about your mindset and your commitment to making it happen.
Exactly. By implementing these 5 strategies, you can take charge of your finances, accelerate your progress towards your goals, and create a life of greater abundance and freedom.
So there you have it, 5 powerful strategies to supercharge your savings and fast-track your journey to financial freedom.
And remember, it's not about deprivation or putting your life on hold. It's about making conscious choices, being proactive, and creating a life that you love. Okay, moving on to chapter 4. This is where Robbins gets into asset allocation, and he doesn't mince words. He calls it the most important investment decision of your lifetime.
Whoa, that's a bold statement. Why so important?
Well, think of it like building a house. Asset allocation is like laying the foundation. It's about making sure your investments can handle whatever comes their way, market upswings, downturns, you name it.
So it's about building a structure that can weather any storm.
Exactly. Robbins emphasizes the importance of spreading your investments across different asset classes like stocks, bonds, real estate. That's diversification, and it's key to managing risk.
Right, it's like that old saying, don't put all your eggs in one basket.
Exactly. Robbins suggests thinking about your investments in terms of 2 buckets, the security bucket and the risk growth bucket.
Okay, so the security bucket is for the more stable, predictable investments.
Right, like cash, bonds, maybe even some annuities. These are your safe havens, especially as you get closer to retirement. They're not going to make you rich overnight, but they offer stability and peace of mind.
And the risk growth bucket is for investments with, well, higher risk, but also potentially higher returns.
You got it. Things like stocks, real estate, maybe some commodities would go in this bucket. They have more potential for growth, but they also come with more volatility.
So it's about finding the right balance between those two buckets based on your risk tolerance, your goals, your time horizon.
Exactly. Robbins really stresses that asset allocation is not one size fits all. It needs to be personalized.
He gives an example from a pretty famous investor, right?
Yes, David Swensen, who managed Yale University's endowment, he was all about diversification, and his approach consistently outperformed the market.
It's always helpful to see what the pros are doing.
Right. And speaking of enjoying the journey, remember that dream bucket we talked about? Well, Robbins brings that up again here, reminding us that financial planning shouldn't just be about delaying gratification.
So it's okay to have some fun with your money now.
Absolutely. Set aside some funds for experiences, travel, hobbies, things that enrich your life in the present moment.
That makes a lot of sense. You don't want to wait until retirement to start living. Now, one thing that's always confused me is this idea of timing the market, like trying to predict when to buy low and sell high.
Robbins actually debunks that myth pretty effectively. He argues that it's far more effective to invest consistently over time, regardless of what the market is doing at any given moment.
So it's about discipline, not trying to outsmart the market.
Right. He introduces this concept called dollar cost averaging, where you invest a fixed amount of money at regular intervals, no matter the price.
So you're automatically buying more shares when the price is low and fewer when it's high, which averages out your cost over time.
Exactly. It's a more strategic and less emotional approach.
I like that. Speaking of strategy, Robbins also talks about the importance of rebalancing your portfolio. What's that all about?
Well, over time, as different investments perform differently, your portfolio can drift away from your original target allocation. Rebalancing is about bringing it back into alignment.
So let's say stocks have done really well, and now they make up a larger portion of my portfolio than I originally planned.
Right, you'd sell some of those stocks and use the proceeds to buy more of the investments that have lagged behind, bringing your portfolio back into balance.
So it's a way to maintain your desired risk level and ensure your portfolio is still aligned with your goals.
Exactly. Now, Chapter 5 delves deeper into portfolio strategies with a focus on achieving upside without the downside.
That sounds like a financial unicorn. How's that possible?
Well, Robbins introduces the all-weather portfolio, a strategy developed by Ray Dalio, founder of Bridgewater Associates, one of the largest hedge funds in the world.
Okay, so this is serious stuff.
It is. The all-weather portfolio is designed to perform well in any economic environment, whether it's inflation, recession, you name it.
Like having a financial fortress ready for anything.
Precisely. It's all about balancing risk and reward to achieve steady growth over the long haul.
I'm noticing a pattern here. Robbins seems to be really big on strategies that minimize risk.
He is. He wants you to build a solid foundation that can withstand any financial storm. And speaking of protection, he also dives into annuities in this chapter.
You mean those contracts with insurance companies that guarantee a certain income stream?
Yes, specifically fixed indexed annuities. They can provide a guaranteed income during retirement without risking your principal.
So it's like having a personal pension you create for yourself.
Exactly. It's a way to create a predictable stream of income that you can't outlive.
That's definitely appealing. And then to protect your assets even further, he talks about setting up a living trust.
Right. A living trust lets you transfer ownership of your assets to a trust while you're still alive, which can help avoid probate court after your death.
So it makes things easier for your heirs.
Yes, and it can help ensure that your assets are distributed according to your wishes. Robbins really takes a holistic view of financial planning, thinking not just about your financial well-being, but also your peace of mind and the well-being of your loved ones.
I like that. It's not just about the money itself, but about the bigger picture. Okay, so we've covered a lot of ground in terms of investment strategies and portfolio management. But in Chapter 6, Robbins takes a different approach. He goes inside the minds of successful investors.
It's like getting a masterclass from some of the best in the business.
Exactly. He interviewed 12 legendary investors and extracted 4 key obsessions they all share.
These obsessions offer a fascinating glimpse into the mindset and habits that drive financial success.
Okay, I'm ready. What's the first obsession?
Won't lose. These investors are laser-focused on protecting their capital and minimizing losses.
Makes sense. It's like they say, it takes money to make money. You got to protect what you've got.
Right. Preserving your wealth is as important as generating returns.
Okay, what's obsession number 2?
Risk a little to make a lot. These investors are constantly on the lookout for opportunities where they can potentially generate significant returns with a relatively small amount of risk.
So they're calculated risk takers, always searching for those asymmetrical bets where the potential upside outweighs the downside.
Exactly. They're not afraid to take risks, but they do so strategically and with careful consideration.
What's obsession number 3?
Anticipate and diversify. These investors are always looking ahead, trying to understand market trends and anticipate future opportunities.
So they're like financial fortune tellers.
Well, not exactly. It's more about having a deep understanding of the forces that shape the market and being able to adapt their strategies accordingly.
And they diversify their portfolios to mitigate risk, like we talked about earlier.
Exactly. They understand that the world is in constant flux and they need to adjust their approach to stay ahead of the curve.
Makes sense. Okay, what's the fourth and final obsession?
You are never done. These investors are lifelong learners. They never stop seeking new knowledge and refining their skills.
They're always looking to improve.
Exactly. They understand that the financial landscape is constantly evolving, and continuous learning is crucial to staying ahead of the game.
So these four obsessions really boil down to cultivating a mindset of prudence, calculated risk-taking, adaptability, and continuous learning.
Exactly. And Robbins argues that these qualities are essential not just for financial success, but for navigating life's challenges and achieving overall fulfillment.
So it's about more than just money. It's about a way of thinking and approaching life.
Exactly. And in Chapter 7, Robbins really drives home that connection between money and a fulfilling life.
He goes beyond just the dollars and cents.
He does. He argues that true wealth encompasses so much more than just financial abundance. It's about creating a life of purpose, meaning, and impact.
He highlights three key decisions that can have a huge impact on your life.
Right. What you focus on, the meaning you assign to events, and the actions you take.
So your thoughts, interpretations, and behaviors all shape your reality.
Exactly. Robbins encourages you to cultivate a focus on gratitude, to reframe challenges as opportunities for growth, and to take consistent action toward your goals.
It's about taking ownership of your mindset and your actions to create the life you want, both financially and personally.
Exactly. He also introduces this interesting concept called happy money.
Happy money. I've never heard that term before.
It's the idea that spending money on experiences, buying time, and investing in others can actually increase your happiness and well-being.
So it's not just about how much money you have, but how you use it.
Exactly. Robbins argues that experiences create lasting memories and contribute to your personal growth. Buying time allows you to focus on things you truly enjoy, and investing in others fosters a sense of connection and purpose.
So he's saying that money can buy happiness if you spend it the right way. And he really hammers home the power of giving.
Yes, he believes that giving back to your community, making a positive impact on the world, can be incredibly rewarding both financially and emotionally.
So it's not just about accumulating wealth for yourself, but about using your resources to make a difference.
Exactly. Robbins encourages readers to think about their legacy, how they want to be remembered. It's about living the world a better place than you found it.
I like that. It's about leaving a positive mark. And to help readers put all these principles into practice, Robbins provides a checklist for success at the end of the book.
It's a really helpful roadmap that summarizes the key takeaways from each chapter and guides you on your journey to financial mastery and a fulfilling life.
So it's like a condensed version of all the wisdom packed into Money Master the Gang.
Exactly. It starts with making the decision to become an investor, not just a consumer.
Shifting your mindset from spending to building wealth.
Right. Then it's about becoming an insider, understanding the rules of the game, avoiding those common pitfalls.
Like all those hidden fees and misleading average returns we talked about?
Exactly. Then it's about making the game winnable, defining your financial dreams, setting deadlines, implementing strategies to save more, earn more, and reduce your taxes.
So it's about taking concrete steps to reach your goals.
Right. Then it's about making that most important investment decision, asset allocation.
Diversifying your portfolio, finding the right balance between security and growth.
Exactly. Then it's about creating a lifetime income plan, possibly using annuities, setting up a living trust.
So you're securing your financial future and protecting your loved ones.
Right. Then it's about investing like the top 0.001%, learning from the habits and mindset of those super successful investors.
Those four obsessions we talked about.
Exactly. And finally, it's about taking action, enjoying the process, and sharing your abundance with others.
So living a life of purpose, meaning, and impact.
Precisely. Robbins' checklist is a really powerful tool for turning knowledge into action and creating a life of both financial abundance and personal fulfillment.
It's about taking control of your financial destiny and building a legacy that extends far beyond yourself.
Now let's delve a bit deeper into some of those specific financial instruments and strategies that Robbins highlights.
I'm ready to get into the nitty-gritty.
Okay, in Chapter 1, Robbins starts with the basics. He really stresses the importance of starting with a simple retirement or savings account.
So back to the foundation.
Right, he reminds us about the power of consistent contributions and the magic of compound interest.
It's amazing how those small contributions can snowball over time.
It really is. Imagine you invest just $1,000 today at an annual interest rate of 7%. After a year, you've earned $70 in interest, bringing your total to $1,070.
Not bad.
And here's where the magic happens. In year two, you're earning interest not just on your initial $1,000, but on that $1,070.
So the interest is compounding on itself.
Exactly, and that's how it really starts to take off. As you continue to invest consistently, the power of compounding accelerates, leading to significant wealth accumulation over time.
It's like that snowball rolling downhill, getting bigger and bigger.
Perfect analogy. Robbins stresses that even those small, regular contributions can make a huge difference in the long run. It's about developing that habit, regardless of the market conditions.
It's about playing the long game.
Exactly. And to make it easier, he's all about automating your savings. Set up those automatic transfers. You won't even miss the money.
Out of sight, out of mind. So we've got compound interest down. What about risk? That's a big one for a lot of people.
Definitely. Robbins emphasizes that risk is a natural part of investing, but it's something you can manage and minimize through smart decisions and diversification.
So it's not about being fearless, it's about being informed.
Exactly. He encourages you to assess your own risk tolerance, consider things like your age, your financial goals, and your time horizon.
So younger investors with more time on their side can typically handle more risk than those closer to retirement.
Right. And if you're unsure, it's always a good idea to seek professional guidance.
Find someone you trust to help you navigate those waters.
Exactly. He recommends working with a fiduciary, a financial advisor who's legally obligated to put your interests first.
So they're truly on your team.
Right. They can help you craft a personalized plan, choose appropriate investments, and track your progress.
So you've got an expert in your corner.
That's the idea. Now, let's touch back on the psychology of money. Robbins highlights the importance of not just setting financial goals, but understanding the deeper why behind those goals.
Right, we talked about 6 human needs that money can often try to fulfill.
Exactly. He emphasizes that by identifying the underlying needs that are driving your financial desires, you can make more conscious and fulfilling decisions about how you manage your money.
It's about making sure your financial goals are aligned with what truly matters to you.
Exactly. And Amber, money can be used to satisfy needs for certainty and security, variety and uncertainty, significance and recognition, love and connection, growth and development, and contribution and making a difference.
That covers pretty much every aspect of life.
It does. And the key is to recognize which needs are most important to you and align your financial goals and spending habits in a way that brings you greater satisfaction and meaning.
So if you value security and certainty, you might prioritize building a strong emergency fund and investing in low-risk assets.
Exactly. And if you crave variety and uncertainty, you might allocate a portion of your funds for travel, hobbies, experiences that bring some excitement into your life.
It's all about finding the right balance for you.
And if significance and recognition are important to you, you might focus on building a successful career or business, investing in personal development, or contributing to causes that you believe in.
It's about finding ways to use your money to create a life that reflects your values.
Exactly. And for those who prioritize love and connection, maybe it's about investing in strengthening those relationships with loved ones, creating a supportive and nurturing home environment, or engaging in activities that foster a sense of community.
And for those who are all about growth and development, maybe it's about investing in education, travel, personal growth programs, experiences that challenge you to expand your horizons.
Exactly. And if you really value contribution and making a difference, you might prioritize charitable giving, volunteering your time, or supporting causes that align with your values and make a positive impact on the world.
It's about finding those ways to use your money to not just benefit yourself, but also make the world a better place.
Precisely. Robbins emphasizes that money is ultimately a tool. It's a tool that can be used to support your values and create a life that's truly aligned with your deepest desires and aspirations.
So it's not about the money itself, it's about what you do with it.
Exactly. And by understanding the psychology behind those financial decisions, you can make choices that bring you more happiness and fulfillment.
That makes a lot of sense. Now let's shift gears and get back into the investing world. In Chapter 2, Robbins debunks some pretty common investing myths and misconceptions.
Right. He wants to equip you with the knowledge to make informed decisions and avoid those pitfalls that can trip you up along the way.
He starts with one that I think surprises a lot of people. The myth that actively managed mutual funds consistently outperform the market.
Yeah, that's a big one. Robbins cites studies showing that the vast majority of actively managed funds actually fail to beat their benchmark indices over the long term.
So all that fancy stock picking and market timing doesn't necessarily translate to better returns.
Often it doesn't. A big reason for this is the high fees and expenses associated with active management. Those fees eat away at returns.
So it's not just about how much your investments grow, it's about how much you get to keep after all those fees.
Exactly. Robbins encourages investors to consider low-cost index funds as a viable and often more effective alternative.
We talked about index funds earlier, right? Those are the ones that track a specific market index, like the S&P 500.
Right. They're not trying to beat the market, they're just trying to match it. And they tend to have much lower fees, which can translate to higher net returns over time.
Makes sense. Keep it simple, keep the cost low.
Exactly. Robbins also exposes those hidden fees that can really hurt investors.
They can be pretty sneaky, can't they?
They can. He talks about expense ratios, transaction costs, soft dollar costs, all those little charges that can add up and significantly reduce your overall returns.
So it's important to read the fine print and understand all the costs associated with any investment.
Absolutely. He also stresses the importance of understanding the difference between those advertised average returns, which can be misleading, and your actual dollar-weighted returns.
Right, we talked about that earlier. Dollar-weighted returns give you a much more personalized and accurate picture of your investment performance.
Exactly. Another myth Robbins tackles is the idea that all financial advisors are the same. He's a big advocate for working with a fiduciary, a financial advisor who is legally obligated to act in your best interest.
Right, as opposed to a broker who might be more motivated by commissions.
Exactly. Robbins provides a clear list of criteria to help you identify a trustworthy fiduciary.
So you can find an advisor who is truly on your team and dedicated to helping you succeed.
Exactly. These myth-busting insights from Chapter 2 are really valuable for anyone navigating the world of finance.
They equip you with the knowledge to make informed decisions and protect your hard-earned money.
Precisely. And they can help you avoid common mistakes that can hold you back from reaching your financial goals.
So we're armed with information and ready to make smart choices. Now let's move on to Chapter 3, where Robbins helps you take control of your financial future by defining your financial dreams and turning them into actionable goals.
He guides you through a process of identifying what truly matters to you and creating a roadmap to make it happen.
So it's about getting clear on your vision for the future.
Exactly. And he introduces this concept of the 5 levels of financial freedom. Each level represents a different stage in your journey towards financial independence and abundance.
Okay, break it down for me. What are those 5 levels?
The first level is financial security. This is all about having enough income to cover your basic living expenses without having to work.
So having that equity net.
Exactly. The second level is financial vitality. This involves having enough income to cover your needs and still have some discretionary spending money to enjoy those things that make life more enjoyable.
So you can have some fun along the way.
Exactly. The third level is financial independence. This is where you have enough passive income coming in to cover all your living expenses, giving you the freedom to choose whether you work or not.
So you're no longer tethered to a job.
Right. The fourth level is financial freedom. This is where you have enough wealth to live a comfortable life, pursue your passions, and even make a difference in the world without having to worry about money.
So you have the freedom to truly live your dreams.
Exactly. And the fifth and final level is absolute financial freedom. This is the ultimate level where you have enough wealth to fulfill any dream or desire, regardless of the cost.
Wow, that's the dream. So Robbins encourages us to think about which of these levels resonates most with us and then define our financial goals accordingly.
Exactly. He provides practical exercises and strategies to help you calculate what those dreams actually cost and create a step-by-step plan to achieve them.
It's about turning those fuzzy dreams into concrete, achievable goals.
Exactly. And he also emphasizes the importance of attaching a deadline to each of your goals.
Deadlines create that accountability, right?
Exactly. And to help you tackle those seemingly impossible goals, Robbins shares a powerful 3-step formula he's learned from his own experiences and from interviewing countless successful individuals across various fields.
Okay, this sounds like some good stuff. Break down that formula for me.
The first step is all about unleashing your hunger and desire.
So getting fired up about your goals.
Exactly. You've got to cultivate that burning desire to achieve what you want. It's that fire that will fuel your motivation and keep you going when things get tough.
Makes sense. What's step number 2?
The second step is taking massive and effective action.
So putting in the work.
Exactly. It's about identifying the specific steps you need to take to reach your goal and then taking those steps consistently and with unwavering commitment.
It's about walking the walk, not just talking the talk.
Precisely. And the third step, which might seem a bit counterintuitive, is embracing grace.
Grace. In the context of achieving goals, I'm not sure I follow.
It's about recognizing that sometimes things happen that are outside of your control, things that can either help or hinder your progress.
So it's about being flexible and adapting when things don't go according to plan.
Exactly. It's about trusting that even when things get challenging, the universe will ultimately support you as long as you stay true to your path.
It's about having faith that you'll find a way, even if it's not always the way you initially imagined.
That's it.
Okay, so we've got our goals, we've got this powerful three-step formula, but how do we speed things up? How do we supercharge our savings to reach those goals faster?
That's where Robbins lays out 5 strategies for really turbocharging your savings and accelerating your progress towards financial freedom.
Hit me with those strategies.
The first one is pretty straightforward. Save more and invest the difference. It's about finding ways to reduce your expenses, no matter how small, and then investing that money you've saved.
So every dollar you don't spend is a dollar you can invest towards your future.
Exactly. Whether it's cutting back on unnecessary spending, negotiating better rates on your bills, or finding creative ways to save on those everyday purchases, every little bit adds up.
It's about being mindful and finding those little leaks in your spending.
The second strategy is earn more and invest the difference.
So it's not just about cutting back, it's about finding ways to bring in more money.
Exactly. Maybe it's asking for a raise or promotion, starting a side hustle, learning new skills that increase your earning potential.
It's about being proactive and taking control of your income.
Right. The third strategy is all about reducing those fees and taxes.
So keeping more of your hard-earned money.
Exactly. This might involve choosing low-cost investment options, exploring those tax-advantaged retirement accounts, working with a financial advisor who can help you optimize your tax strategy.
It's about making smart choices that minimize the amount of money you lose to fees and taxes.
Exactly. The fourth strategy is to get better returns and speed your way to victory.
So this is about making sure those investments are working hard for you.
Right. This might involve investing in birth stocks, real estate, or other asset classes that have the potential for higher returns.
So you're willing to take on a bit more risk in exchange for potentially greater rewards.
Right, but it's still about managing that risk effectively. Diversification is key, like we talked about earlier.
Don't put all your eggs in one basket.
Exactly. And the fifth and final strategy might require some bigger life changes. Robbins calls it change your life and lifestyle for the better.
Okay, I'm intrigued. Tell me more about this one.
It's about taking a step back and considering whether there are any significant changes you could make to your lifestyle or even your location that could help you reduce expenses, increase your income, or maybe even take advantage of more favorable tax environments.
So it's about thinking outside the box.
It is. Maybe it means downsizing your home, moving to a place with a lower cost of living, even relocating to a country with more favorable tax policies.
These are big decisions.
They are, but sometimes those big decisions are what it takes to really unlock a greater level of financial freedom.
It's about being open to new possibilities and creating a life that truly aligns with your values and aspirations.
Exactly. Robbins really emphasizes that achieving financial freedom is often about a combination of mindset shifts, disciplined actions, and strategic decision-making.
It's not just about luck, it's about taking control and making it happen.
Exactly. By implementing these 5 strategies, you can accelerate your progress toward your financial goals and create a life of greater abundance and freedom.
They're all about taking charge of your finances and creating a life you love. Now, let's dive into the different types of investments that Robbins highlights.
Sounds good. Remember those 2 main investment buckets we talked about, the security bucket and the risk growth bucket?
Yep, I remember.
Okay, let's start with the security bucket. This bucket is all about preserving your capital and minimizing risk. It's where you'd put your money if you want stability and peace of mind, especially as you get closer to retirement.
Okay, so what kinds of investments go in this bucket?
Well, Robbins starts with the most basic building blocks. Cash and cash equivalents. These are things like your checking accounts, savings accounts, money market accounts, maybe even short-term treasury bills.
So those super low-risk, easily accessible options?
Exactly. They're not going to make you a fortune overnight, but they offer liquidity and stability.
Okay, what about bonds? I've always heard those are a good option for retirement.
They can be. Bonds are essentially loans that you're making to governments or corporations. They typically pay a fixed rate of interest over a set period, so they can provide a fairly predictable income stream.
So they're generally considered less risky than stocks.
Right, but bonds still have some risks, particularly when it comes to interest rates. If interest rates rise, the value of existing bonds can fall.
Okay, I see. What about certificates of deposit, or CDs?
CDs are similar to bonds, but are issued by banks. They usually offer a slightly higher interest rate than a regular savings account, but your money is locked in for a specific term.
So you need to be sure you won't need to access those funds before the CD matures.
Exactly, and you might be surprised to hear that Robbins actually includes your home in this bucket.
Really? My house is a security investment.
Well, for most people, their home is their biggest investment, and while it can appreciate in value over time, it's not as liquid as stocks or bonds.
Right, you can't just quickly convert your house into cash if you need to.
Exactly. And you also have to factor in all those ongoing costs of homeownership, mortgage payments, property taxes, maintenance, and so on.
So it's not just about the potential appreciation, it's about the whole picture.
Right. Now, when it comes to creating retirement income, there are pensions and annuities.
Those are both designed to provide income during retirement, right?
They are. Pensions are typically sponsored by employers, and annuities are contracts with insurance companies that provide guaranteed income payments.
So they're both ways to create that predictable stream of income during retirement.
Exactly, but it's really important to understand the terms and conditions of these plans as they can vary widely.
Do your homework. Robbins also mentions structured notes in this chapter.
Those are a bit more complex. They combine features of bonds and options. They can offer higher potential returns than traditional bonds, but they also come with greater risk.
So probably not the best choice for beginners.
Right. Now let's shift over to the risk growth bucket. This is where things get a bit more exciting.
Okay, I'm ready. Bring on the risk. Well, calculated risk, of course.
Of course, this bucket is for investors who are looking for potentially higher returns and have a longer time horizon and a higher tolerance for risk.
So stocks would definitely fall into this category, right?
Absolutely. Robbins starts with equities, or stocks. Stocks represent ownership shares in publicly traded companies. They have the potential for significant growth over the long term, but they can also be quite volatile in the short term.
So you have to be prepared for those ups and downs.
Exactly. And then Robbins talks about high yield bonds.
I've heard those called junk bonds. Sounds a little risky.
They are a bit riskier. High yield bonds are issued by companies with lower credit ratings. That means there's a greater chance that they might not be able to make their gut payments.
But they typically offer higher interest rates to compensate for that risk, right?
Exactly. Then there's real estate, another classic investment.
Everyone's always talking about investing in real estate.
And there are many ways to do it. You can buy rental properties, flip houses, invest in REITs. Real estate can offer both appreciation potential and income generation, especially if you're renting out properties.
Host.
Right. But it comes with its own set of challenges, property management, maintenance, market fluctuations.
Yeah, it's not a passive investment, that's for sure. Okay, what about commodities?
Ah, yes. Commodities, those raw materials like gold, oil, agricultural products, they can be quite volatile, but they can also serve as a hedge against inflation.
So a little bit of a gamble, but potentially worthwhile?
Right. Now, currencies, that's a whole other beast.
Yeah, I've heard about people making money trading currencies, but it seems pretty risky.
It can be. Currency trading, or foreign exchange, as it's sometimes called, is very speculative. It's not something I'd recommend for beginners. There's a lot to learn, and the risks are high.
Makes sense. Stick to what you know, right? Okay, and then Robbins touches on collectibles.
Yes, things like art, antiques, rare stamps, that sort of thing. Collectibles can definitely appreciate in value over time, but their value is very subjective and can be hard to predict.
So it's a bit of a gamble, too.
Right, and it's important to do your research, understand the market, and be prepared to hold those assets for a while.
So whether we're talking about the security bucket or the risk growth bucket, diversification is key, right?
Absolutely. Don't put all your eggs in one basket. Spreading your investments across different asset classes helps to mitigate the impact if any single investment doesn't perform as expected.
Right, it's about balancing things out. Now, in the later chapters of the book, Robbins shifts gears a bit from specific investments to those broader principles of wealth management and the connection between money and living a truly fulfilling life.
Yeah, he gets into the mindset and habits of successful investors, diving deeper into those four obsessions we discussed earlier.
Right, don't lose, risk a little to make a lot, anticipate and diversify, and you are never done.
Exactly. And it's important to remember that those aren't just about making money. They're really about cultivating a mindset that can help you succeed in all areas of life, not just finance.
So it's about being prudent, being a calculated risk taker, being adaptable, always learning and growing.
Exactly. And then Robbins gets into this really fascinating exploration of the connection between money and happiness. He argues that true wealth is so much more than just financial abundance.
It's about living a rich life, not just having a fat bank account.
Right. He emphasizes aligning your financial goals with your values, your passions, your aspirations. It's about making sure the pursuit of wealth enhances your overall well-being and contributes to a life of meaning and purpose.
So it's about using your money to create the life you want, rather than letting money control your life.
Exactly. He also talks about those three key decisions that can have a profound impact on your life. Remember those.
What you focus on, the meaning you give to events, and the actions you take.
Right. Essentially, it's saying that your thoughts, interpretations, and behaviors all play a role in shaping your reality.
So it's not just about what happens to us, it's about how we respond.
Robbins encourages you to focus on gratitude, to reframe challenges as opportunities, and to take consistent action towards your goals.
It's about taking control of your mindset and your actions to create the life you want, both financially and in every other aspect of your life.
And then he introduces this concept of happy money.
Yeah, we touched on that earlier, the idea that money can buy happiness if you spend it the right way.
Right, it's about being intentional with your spending. Experiences, for example, can create lasting memories and contribute to personal growth. Buying time can free you up to focus on things you enjoy. Investing in others fosters connection and purpose.
It's not about being selfish with your money, it's about using it in a way that enriches your life and the lives of others.
Exactly. And Robbins is a huge advocate for giving. He believes that giving back to your community and to the causes you care about is one of the most rewarding investments you can make, both financially and emotionally.
It's about using your wealth to make a difference, to leave a positive mark on the world.
And to bring it all together, Robbins provides a checklist for success at the end of the book.
Right, we've talked about that checklist. It's basically a roadmap to financial mastery and a more fulfilling life.
It is. It summarizes the key takeaways from each chapter and guides you on your path to achieving your financial goals and living a life you love.
So it's a great way to put all of this knowledge into action.
It is. It starts with making the decision to become an investor, not just a consumer. Then it's about understanding the rules of the game, defining your dreams, taking those concrete steps to achieve them.
Making those smart investment decisions, diversifying, securing your future, learning from the best.
And ultimately, taking action, enjoying the journey, and sharing your abundance with others.
It's a powerful reminder that financial success isn't just about the numbers. It's about aligning your money with your values and using it to create a life of purpose, meaning, and impact.
And that's really what Money Master the Game is all about. It's a comprehensive guide to achieving financial freedom, but it's also about so much more than that. It's about living a richer, more fulfilling life and making a positive difference in the world.
So there you have it, our deep dive into Tony Robbins' Money Master the Game. We've covered a lot of ground, from the basics of compound interest and investing to those deeper principles of wealth management and the connection between money and happiness. What really stood out to you? What are you going to implement in your own life? The journey to financial mastery starts with a single step. So what step will you take today?